We're talking technical analysis today with Jason Pizzino, host of the Jason Pizzino YouTube channel. Welcome to my show, The David Lamb Report, Jason. Thanks for being here.
Thanks very much for having us, David.
You've done a lot of excellent work on analyzing the stock markets and Bitcoin. Let's talk about both today. But before that, talk about your style of trading and how it is that you analyze charts.
Yeah, for sure. Well, for those that don't know my channel or know me, I'm looking predominantly at technical analysis, swing chart analysis, and I go across it in terms of a macro view. So I cover the stock markets because it's where the majority of the history is in the markets, and that gives us an idea about the cycles that we've had in the past and the cycles moving forward. Bitcoin basically follows the stock market when it comes to the major ups and downs, obviously, because money's coming in and going out. And on top of that layer, we look at the real estate cycle because that's basically where the majority of the market in the world is across real estate, or I guess what the Americans call, the housing market, property market, whatever you want to call it. Basically, that is the macro cycle that we follow, and all those other cycles follow within that. So that's my style of trading, basically technicals and understanding the macro real estate and economic cycle.
And have you noticed that the stock markets overall generally reflect the real economy, or sometimes do you think there are divergences?
There's definitely divergences, and I think that is the problem that many analysts and news media are looking at, and the average investor, even some of the more experienced investors, they're trying to marry up the economy with the stock market. And things are going bad in the economy, things are going bad for the average American. Yet the stock markets keep going up. We had cycle lows in 2022, October for the stock markets and November for Bitcoin, and the markets have gone up from that point, and they're still trying to figure out why is this happening. It's just delaying the process. And yes, we'll get a big collapse, but the markets are going up. So if you're a long-term buyer, buy when the markets are down and sell later on.
All right, so let's take a look at the charts here and analyze where the momentum is and whether or not this rally that you just talked about in the stock markets can continue.
So looking at the macro cycle, we're starting with the S&P 500. This has been one of the best bear markets that we've had. I say best because it's been very slow in terms of the move down over the last 10 months into that low in October. So this is obviously a monthly chart here. And on the grind out, we've basically had a solid 10 to 12 months of a trading range. So this is this period through here. So what we've seen is extreme panic on the June low, which is this red candle here. We saw more panic in September, which led into an October low. And we've seen extreme panic on the March low, which is this green candle right here. Now, after all of those extreme panic events, extreme fear, this was the banking crisis collapse. We've obviously had inflation fears. We've had interest rate rises. We've had the war in Russia and Ukraine back here in February, amongst you could list every single problem that's gone on. The stock market is now breaking back above previous tops over the last 10 to 12 months at some of the highest closing prices on the daily, on the weekly, and on the monthly chart. So investors, or at least smart money, quote unquote, is buying up on these extreme panic dips and every dip in between, like we just saw in the last 2 months with regional bank collapses, which only saw very shallow drops in the market compared to what we've seen previously over the last 12 to 16 months. And now they are pushing the prices up, even breaking past major 50% levels. Basically, that's the halfway point in this entire bear market drop.
Interesting. And Jason, when you're looking at this chart, it's bottomed in October, as you said. It's rebounded. Do you think that this momentum, this rebound that we're seeing, is part of a new bull market, or do you think that it is still a continuation of the longer-term bear trend, but we're just getting a slight rebound from the bottom, which typically happens in bear markets?
Yeah, good question, because that's obviously come up a lot, and people are wondering, especially when they sort of compare to a few other bear markets as well. What we've talked about many times, and I've posted this publicly through these bottoms in June and October on the channel, is that we typically see bear market bottoms in October. As crazy as it sounds that these things happen time and time again in almost the same month, but when we look at the data, about just over 50% of bear market bottoms happen in October. over 50%. And then there's typically another low around June, sometimes around the December period, and also around March. And the fact that we got a low, a very significant low in June, an extremely significant low in March on the back of that extreme news, like that was the banking collapse that everyone is expecting the markets to fall out of bed and obviously come to new prices, yet the market's now up from that point. The fact that we got these lows at all of the most the times in the market where we see the most lows is another sign that we're probably seeing this market bottoming and rounding up to new higher prices. And potentially within this cycle, this new cycle of the bull market, which if you count it from the low in the cycle, we're probably going to see new higher prices on the S&P before we see new lower prices, basically, or new prices breaking 3,500.
Interesting. So this grind higher that we're talking about, a lot of people that I've talked to are bearish, and so I'm not a bull or bear either way. I'm an interviewer. I don't really have a stance. But suppose I'm playing the part, right? Hypothetically, I tell you, hey, Jason, I think we are in a continued bear market, and we're not going to see new all-time highs, like you just said. And that's because I think that the market is already overvalued. And I think that economic conditions, like we talked about, are deteriorating, and there's no reason for this dead cat bounce to continue. How would you reply to me?
I would say everything makes sense. It all makes sense when you think about it in terms of the economy, that things seem overvalued. Everything seems far too high. The average American can't afford whatever it is that we see in the news next. First it's food, then it's cars, then they talk about how expensive fuel is, and they talk about how expensive food is, and then energy costs. Like, we see this hitting us day in, day out. Everything's too expensive. I'll just say, you can't trade that. What we can trade is the market. And whoever is buying this, whether it's the hedge funds, whether it's family offices, whether it's major investors, they continue to buy this market at higher and higher lows. You can see we had the October low, we had the November lows higher, we had the December and January lows are higher. We had an extreme event in March, a higher low. And again, we just saw a higher low in May as well. And now it's breaking past all previous tops, getting back above the levels that it collapsed from. So we had this collapse from April, May, and June. That was the big move down from that March top. And we're basically back in the middle of that zone again. So whoever it is, that's why we look at technical analysis, is basically finding value in this market back at those same prices that the market was at over 12 months ago.
When you say that it's going to grind higher to new all-time highs, do the charts indicate a potential level for you that you would be comfortable taking profits at?
In terms of a price, no, but I put a big but on that because we look at the timing of things. And I know there's a pretty common saying out there, you can't time the markets. It's better to be time in the markets than timing the markets. But what we've seen with the cycle is that there is some pretty significant timeframes that you can more or less, not necessarily rely on, but you can look forward to. So if we start to see these markets get overheated, also signals, whether we're looking at our swing chart, breakdowns, we're seeing overheating signals, that sort of thing, then that's a good time to be selling, or at least selling into that move to the upside. But like Warren Buffett says, when there's fear in the market, you should be out there buying. And at the moment, all we've seen is fear on top of fear on top of fear. And everyone has been talking about this fear, less so now in April and May than they were talking about it in June, in September, December, and of course, March. Everyone's been talking about the fear through there, but the price keeps going up. So in terms of a area to sell, not yet. And we'll be able to see some of those signals when it comes to the chart pattern. We'll be able to see it in terms of the fear and greed. We'll be able to see it in terms of our breakdown levels, momentum starting to slow to the upside when there is more greed coming into those markets as well.
So I'm curious as to, let's come back to the statement you made earlier about the market crashing afterward. So we're talking about a continuation of this rally to new all-time highs, and then it's going to crash, right? Okay.
Yes.
So let's talk about this inflection. You mentioned that we have overheating signals to watch out for. Can you elaborate a little bit more on these overheating signals and what exactly they are and how to look for them?
Yes. I mean, the main one I'll just keep to. There's a few. Obviously, we go into the technical analysis, so that's going to take a little bit more time to check out in the chart and see. One of them is a breakdown of a swing chart. So, this gets a little bit technical, so it's not necessarily that any average Joe can use it just by talking about it. But once you learn about it, it becomes quite simple. Once you start to see a lot of these swings break down, and then you start to see, like in the case of this top, a lower top form. Basically, a market falls, breaks many of the previous monthly lows, tries to rally again. So if I zoom in, we can see how that looks on the monthly there. You can see it start to rally, and you'll see the greed come back into the market, but then fail to get back to the previous top. That's one of those signals. It's not the only signal, but it's one of those signals to watch out for, where you see the greed come in, yet the price is not supporting it. So there's smart money, there's investors, they are selling into that greed that's trying to push the market back up. And you see the weakness start to form in the market. Now, this happens over many, many months. You can see there's you got the top forming 1, 2, 3 months, 1, 2, 3 to the downside. So, 6 months. It's not just it happens overnight, but it takes time to play out. So you start to see that pattern form. It breaks down. Major areas break. 50% levels start to break. And they're the things that we look out for when we start to see the market roll over.
Interesting. And this correction that we're talking about after it climbed to new all-time highs, do you know how significant? Well, nobody knows for sure, but can the charts tell you how significant this pullback is? Can we see just from how far it's run up, how far the next pullback could be?
Yeah, we'll have to see where that top comes in and how it forms. If it forms on big moves to the upside, say like with cryptos or penny stocks or tech stocks that are new to the market, they start to have this big push to the upside and they run pretty hard and fast, then you're going to see a further pretty fast pullback. But because these markets are old, traditional markets have been around a long time, they typically don't run up at that speed. Doesn't mean they can't fall as fast like we've seen in the GFC, but we have to see what price that comes in at the top. Do we start to climb and hit 5,000, 6,000 points? How does it form? Is it very fast, or is it methodical with, stair stepping to the top? Because that means there's more support coming into the market at those higher prices, leaving more support on the way down. Or does it just sort of shoot straight up? So if we do get those stair step move up, maybe we start with a stair step move down and then a quick fall to the downside. So we have to wait and see first, where does that top come in? Where does a weak signal like that start to form at those higher prices? And then we can start to look to the downside in terms of a percentage move, how far we think it might fall, look at some other key support levels as well to the downside.
Excellent. Let's flip over to Bitcoin first. And before we even look at the charts, the first question that I have for you is whether or not you think Bitcoin will continue to trade alongside stocks, in particular the NASDAQ index, or do you think that eventually we'll see some sort of divergence? Is that something you're expecting or not?
I'm not necessarily seeing a divergence in the macro yet. Yes, there's divergence day to day. We've all seen that even recently with the stock market basically trending up, whereas Bitcoin's been trending down and then now sideways in this period here just over the last couple of weeks. But in terms of the macro, look, the stock market bottomed, well, both, NASDAQ and the S&P, they bottomed around October, right on this little green candle that you can see here. Whereas Bitcoin had a significant bottom there as well. But of course, the FTX saga happened and we had that collapse. So it's basically had its low in November. So yeah, it'll potentially trend along with the market because they're both risk on assets. And when people have an appetite for risk in the stock market, they get a higher beta using Bitcoin. There's bigger gains to be had in Bitcoin than there is in just the indices. So that if they've got the opportunity to be trading Bitcoin, I suspect they're going to go for the higher beta and trade Bitcoin. We had 100% move from this low. Stock markets have had 20, 25%.
So if we're expecting then the stock markets in particular, to trade to new all-time highs this year, can we make the same statement about Bitcoin, that Bitcoin will also trade to new all-time highs this year?
So for the stock markets, I'm not sure if they'll trade to new all-time highs in 2023. I think they'll have an attempt in it within the next 1 to 3 years, attempt at that high. Potentially in 2024, we might hit those all-time highs, right? It doesn't mean once we hit them, then we just burst to even bigger prices faster, but it will probably attempt them maybe next year in 2024. Bitcoin, I think, has the opportunity where we still need to overcome this big channel right here. But if the stock markets are going up, I suspect Bitcoin will also go up as well. There's a risk appetite there. People are going to be into BTC and they're going to be pushing this thing higher.
Mm-hmm. Okay. And in terms of levels right now, we're talking about 26,000, roughly 27,000 on Monday afternoon Eastern time. Is there a resistance level at around this point? Certainly at $30,000 is a key psychological level. So let's talk about that level and when do you think that could be breached?
Yeah. So for Bitcoin, I'm looking at around 28 and a half as one of those key levels that it needs to overcome. You can see that's that first horizontal yellow line. It's been held up before. It quickly tested it, came back under it, tested again. So it's a level that has been used in the past, especially through exactly 12 months ago when we had a Lunar UST collapse. It sort of traded in this range between 28 and 32, because when you go back again using our support and resistance, this was the collapse in 2021. You can see the market was touching on those levels at 32, found support in that zone and then pumped. And then even back when Elon Musk was posting and tweeting about Bitcoin back in January of 2021, there were some pretty key levels in those exact zones. So this was a top here in late December, some previous bottoms, and then the market came back into this zone. So 28 and a half to around 32 is going to be a key level for Bitcoin to overcome. I suspect when it does, you will start to see less of the bears and more of the bulls. Basically, comments from people saying that this thing has to go lower and we're going to see new cycle lows. That will become less and less once we overcome this key crossing here between 28 and 32. There's just nothing left for them once it overcomes this level. They'll be then looking towards 48 as the next level, and of course the all-time highs. And the more we go up in these little stair-stepping movements, the better that is for Bitcoin, because there's more stability in price at lower levels. So we get this nice stair-stepping move up rather than this ridiculous FOMO pump that we see in those patterns. These areas are unsustainable.
Why is it ridiculous, Jason? It doesn't usually happen in capital markets. Is that? I'll let you elaborate on that.
It's ridiculous because this is where the FOMO begins. It's where the ridiculousness comes in the market. You start to see.
At what point do retail traders usually come in? I mean, you made a good point. This is where the FOMO begins. I'm suspecting, and I think I've read literature on this, that most people who get in on Bitcoin usually get in near the top. Have you noticed this?
Oh, 100%. And the same thing with altcoins. They usually get in at the top. The same thing with the stock market. The same thing with real estate. It's just over longer or shorter periods of time. Stuff that's easier to buy and sell, like altcoins and stocks, they have bigger pumps and dumps. Stuff that's harder to get into and takes longer in the process, like real estate, it takes more time. But you see that the exact same patterns across all markets. And just to the point of the ridiculousness here, this is where that retail is getting in. I specifically remember around this point in December 2020, January 2021 is really where it started to go nuts on YouTube. It was just across the newspapers, across YouTube, across the media. That was pretty much that first peak. So when they saw the pullback, they thought, sweet, I'm in this. And all they got was an extra 100% from Bitcoin. And then the dump came all the way back to their entry prices. Or unfortunately, for a lot that were buying in at 50 and 60, they were now down 40, 50%.
I remember those days as well. Everyone was talking about new all-time highs in Bitcoin. Some people were right. Some people were wrong. A lot of calls for above $100,000. Generally, the adage that if your cab driver tells you to buy something, suppose he's telling you to buy Bitcoin, you should not buy it or sell. How much truth is there in that adage? And let's dissect the psychology of the masses getting in. Yes.
There is 100% truth in that. And I've seen it in every single market. I've got a pretty good example. It's not Bitcoin. It happens in all the markets. Look, I'll quickly show it because I think it is okay. It's so interesting. Let me move this down here.
I've had it while you're pulling up that chart. I've had several instances of people, or cab drivers in particular. We're just going to use that example, asking me, "Have you heard about Bitcoin?" Actually, it's happened at the customs too. If I travel for a conference to the U.S.,
oh my gosh,
like, what are you doing? What's the nature of your trip? And then I'm here for business. I'm going for a Bitcoin conference. Oh, what do you think about Bitcoin? I think it's going up. Do you think it's going up? I don't know, man. I mean, I don't have a view. I mean, the customs security officer is asking you about Bitcoin's going up. Maybe it's a test. I don't know, but I think it went down after that. But yes, anyway, I'll let you talk about this chart now.
Yeah, it's pretty true. Like I don't hear about it, and then all of a sudden you hear about more. I'm like, oh, that's probably a top signal because these people that usually wouldn't talk about it are now talking about it. It's like, why are they talking about it? Well, they probably heard it from a friend, and who did that friend hear it from? Probably some news headline or something that's pumping in the media because they're not actively watching this stuff day in, day out, like a typical trader or a long-term investor, right? They might be looking at it day to day. Um, so that's usually a signal for me. I'll go back and have a look. What I found in September, and I posted all this stuff on Twitter, it sounds too good to be true, like too easy, but at the time, it's quite challenging. This is the US dollar. If you remember back in September of 2022, US dollar was pumping. That was this particular week here
Mm.
in mid September. It was pumping. It was going to new fresh highs, 113, 114, nearly getting to 115. I started to see. So this is going to your adage here with the taxi drivers. You know, I follow a few different people on social media. They might be musicians, whatever. People who would never talk about the markets.
Hmm.
These specific days we're talking about the US dollar. You know, they were European and their currency was getting crushed. So they were just talking about, oh wow, the dollar is just going nuts. You should be, you know, getting out of euros and getting into the US dollar. It was like the exact top. All we were seeing in the news headlines was euro collapsing. The British pound was collapsing. Is the British pound going to go to parity? It was across all of the headlines. Everyone was talking about it. Surprise, surprise, it was the top of the market. And we had the exact same pattern happen here. The market started to fall. You can see that next push up. If I bring out our TIA Gann swing indicator, you can see the top's getting lower here, yet the greed was still trying to push this market up. So the quote unquote, because people get triggered, smart
Right.
money was selling into these tops and selling again into these tops. And then eventually it collapsed, this big red candle, which was the exact day that Bitcoin, well, the exact week Bitcoin was bottoming. So it was a
I
collapse. The exact same thing happened in reverse.
I wonder if the reverse can be true, meaning if nobody is talking about it, or if sentiment is weak, or if people are just generally um, there's this apathy around a certain market, then we perhaps reached a bottom. I'll give you an example. I was just in Miami over the weekend, BTC Miami, the conference, and great conference as usual, but the attendance was very low compared to last year. I mean, the conference center was at 50% capacity, and probably not even that. Last year, there were probably double as many exhibitions and exhibitors. Media was slow. Not a lot of people there. And I understand why, because we've been in a bear market for a while, but this sense of apathy has got me thinking maybe that's a signal for a bottom. I don't know. What do you think?
Yes, we're around the bottom period, and that pretty much reminds me of another chart that I had here. This is something that I posted about on Twitter and on YouTube yesterday, going into far more detail, but just to break it down, I see this just breaking it down into 6 monthly periods. And right now we're in this, what I'm seeing is the second 6 month period from the low. So November, the low, we're in May, we're basically about to roll over into June for the second 6 months. These times were extremely quiet in the market. The first 6 months, half of it, if we go back to 2019, you can see in the middle here, 2019. I don't think I've got a cursor that I can show you with, but yeah, that's where it says first in the middle. We had a bit of excitement into that peak at to $14,000. And the second 6 months went quiet. The third 6 months, very quiet around that halving. That was the only sort of noise. Obviously, we had the C-19 pandemic. That was some noise as well. But overall, the market just traded between 7K and about 10K. It didn't really do much. And then the noise started to come through the fourth. So I think that's the sort of period that we're in right now for Bitcoin. You can even look back to 2015, 2016. We had the second 6 months. Sure, it broke out of the accumulation zone. Well, what do we see here? We basically broke out of the accumulation zone towards the middle of the first. So middle of the first 6 month period from the low. And then the market goes quiet. People weren't talking about Bitcoin in late 2015, early 2016. It just kept creeping up, creeping up, creeping up. And it wasn't until we got to 2017 where the bull market starts to run from 2K to 20K that you get more and more noise. It gets to 3K, 4K, 5K, 10K. And you had all the noise in those last couple of months. And that's pretty much when the retail gets in and gets crushed, just like last time. They typically get in around that fifth period, that fifth 6 months, stay around for the sixth. And of course, they stay around for the bear market and then they all leave. And like you just saw at Bitcoin Miami, it's basically dead and quiet for this period. So it's not necessarily that there's going to be a new low, but it's probably just this apathy period where it's just sideways, It's grinding around. We don't see much volume through, YouTube or anything like that. People searching for it. The volumes are at one of their lowest levels. Probably a good time. No one's talking about it.
Yeah, I've noticed that with my own Bitcoin videos. They've been not getting as much traction as the stuff I've been doing last year.
So this is probably not a good idea to do this video then.
I'm gonna lead with stocks in the headline. You'll see. Finally, then, for the viewers watching, let's put this all together. The conclusion here: do you think the markets, both stocks and Bitcoin, will continue grinding higher until the remainder of the year?
Probably. Doesn't mean we're not going to see some tests to the downside and tests to the upside. That's what this period is about. Like we just talked about, when it goes a bit quiet, now the real traders and the people who are here full time, they start to test those levels. Where is the support coming in? Where is the supply in the market coming in? And where is the demand coming into the downside? So they start to push prices up. Is there some selling coming in? Markets come back down to test those undersides. So I think for 2023, this is going to be one of those periods where we start to transition out of the bear market, which the cycle was end of last year. So 2022, October, November, basically those cycle lowest prices, and we're transitioning into that bull market. And this period takes time. The crazy FOMO part of the bull market probably isn't for another 12 months, 18 months or so. So I don't think it's going to be crazy, but we're going to see some of this period of the slow grind up and people just sort of figuring out, oh, is it too late? Is it too early? Oh, the prices are up a bit high. I'm going to wait. And then they wait for it to fall back a little bit and they go, oh, it's going to go lower. And this is the psychology that continues through these periods at lows in the market.
Very good. So finally, Jason, thank you for your analysis. Let's talk about your work. Where can we learn more about you and your analysis?
You can find me on YouTube and on Twitter. And of course, I've got a website as well where we teach people how to read the macro cycle and go through crypto trading and stock trading as well, using our information here and the education that we use with our Gann analysis and Wyckoff analysis as well. So that's where you can find us. And of course, we cover the macro real estate and economic cycle as well, which is the underpinning of everything when it comes to our economies.
Right. Okay. Thank you, Jason. I appreciate it. Thank you for being here.
Thanks very much, David. Catch you.
And we'll put those links to Jason's work down below. Thank you for watching. Don't forget to subscribe.